Good morning. Welcome to ABC123 Trader. This is Mike. It's January 18th. It's 7:24 a.m. Eastern Standard Time. And what this video is going to be about, it's going to be about two indicators. One is called the scalp trader and one is going to be called the TickRange. And the reason why I want to do this video, I want to show you something about risk and reward. On Friday, I took too much heat on my video and it turned around and I was okay. I know I can afford that risk reward, but for my some of the YouTube people that are watching the channel, I know they don't have that type of risk and reward. So with that being said, let's get into the two indicators I'm going to show you today and just a little bit about the methodology. But before we get into these two indicators, the current chart that you're looking at are YM, ES, NQ, and RTY. Right here, YM, ES, NQ, RTY. Same months, 0303, 0303. And what you'll notice, if you can tell, all these charts look the same basically. The run down here, the run down here, the run down here, the run down here, spike, 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 drop. And if you look at it over and over again, even these little mini spikes, see? These spikes here, these spikes here. This one actually was, no, it's right there, a little bit lower. But you can see majority of the time, they're following the same pattern. Look at W pattern, W pattern, W pattern, W pattern. So the bottom line is it doesn't matter which instrument you trade for the indices in the futures. They pretty much act the same way. Now, you might be asking why? Why does it do that? Well, I still believe it's always because of the computer robots. They have the algorithms. So one person's saying, oh, we got to check NASDAQ, it's running better than RTY, or YM or ES is doing better. You know, for myself, is if you can get good at one instrument, understand the risk and reward, you can become a very consistent trader. That's all I want to show you. So if you're an ES traded versus a YM trader, you have to learn your risk and reward. If you're an NQ, which is way more volatile than the YM or ES generally speaking, you have to learn your risk and rewards. So now let's get into this chart here. I'm going to close this as well. We have these buttons and I'm not going to talk about the buttons for now. Now the key for the scalp trader is always the pullback. We have three types of trades. Actually, I have to open this up again, sorry. Oops, cancel. We have three types of trades. We have the breakout, which is on the top. If you know she's a runner. We have the baseline breakout. This is this one right here, and where these circles are the baseline breakout. And then we have the buy sell ATR. I might actually have to create another one more button here of the mid band. And what you can see on this chart here, this right now are 48 tick reversals, okay? And usually when I did an original video on the 48 tick pullback, it runs really well. The areas where you have issues is when this happens, see? And it's been doing it quite often lately. I don't know if it's the elections. This is where you get destroyed. So you have to wait for that deep enough pullback in order for it to pull down over and over and over again. So with that being said, how can we avoid doing this? Well, there's another indicator which I call TickRange. And this TickRange, what you do is you try to get within the, if the marking is blue, you want to wait for the pullback, get into the kind of in the area and try to get in the trade. And you do that over and over and over again. My original setup for the TickRange is usually, I have it set for 13 right now, but my standard for majority of the indices is 6, okay? So if I use 6, and and it's moving down quite nicely. As you can see, we try to get into trades like this, or right here, or right here. You wait for the groupings to take the trade, wait for the groupings to take the trade. But because it's so choppy, see how you're getting here and then you get whipped out, here you get whipped out. What you want to do, especially it's been so ugly lately, what I've decided to do, because here's a nice runner here, you know, if you got in this, you're way to go. But but this is just too much noise. I said, how can we avoid getting caught in this ugly zone? So what you can do with the TickRange, you can increase your range. So these bands will start becoming wider. And then, so I have it at 7. Well, if I go to 15 or let's go to 20 for now, so you can see the difference. If I go 20, the bands are so huge, as you can see from here to here. It takes to get in the trade. Looks like there's kind of really no harmonics except maybe in this band here or whatever, because we're trying to wait for the perfect pullback, right? Here, away you go. So I'm looking at it for, just depends which instrument you're trading. I'm trading YM right now. I'm going to try 13, and the only reason why I chose 13 is I saw where it was bouncing. We can even try 14 here. No, see, look how nice that is, but let's try 14 for example. Okay? 14 will work as well. So what we're looking for is, see how she's just tapping and tapping a few times. And we know we're range bound. So what you can do is, we know where the bottom of the range is, or this deep area of the range. We can try to get into a trade to continue on. Okay? So for example, at a 14, let's go for example here. Just give me a second. On a 14, on 8 bands, is 112 ticks. So what you can do on this, I'm going to go to data series. Instead of a 1148, I'm going to go to 11112. Or was it 114? Sorry, I'm brain hiccuping here. Apply. Okay. Now let me just check it again. My brain hiccuped. 114 or 112? What was it? We had 14 times 8. Yeah, 112. Okay, so we're on a 112. So if I'm on a 112 there, and if I change my indicator for the TickRange, we are on 14. Okay, and this is, we said it was a 112. We have to make this 112. Okay. Now the bars are much longer from going from point A to point B, okay? And that's okay. Because the key is, oh, look at that. Oh yeah, that's your bar, okay. What we want to do is try to stay out of the bad trades. See how deep this retracement was? We were getting hooped on that. But what we can do now, because of the deep retracement, we can wait for the pullback. And this one was so deep, we get in here and we take our trade up. This was close to that 112 again. And right now, let me just check something here. 48, 48, let me just check something here. Let's go reload Ninja script. And I want to check one more thing here. It's interesting. I might have to change something on here. What we want to do is we want to get to the 50% bar at the 112. That's our key. I don't know why this mid-band, I'll have to check why it's not doing this. This should be actually at the mid-band, so I'll have to check my logic on there. I think because I had it set originally for the 48 tick, so I'll take a look at it. But yeah, and that's the key. So every time we're looking for a trade now, we're trying to look for that 50% retracement, because we know this retracement here from here to here was 50%. And so as you can see, where it's tapping right now, we could say maybe we could take a trade and go up. Right now we had the first major impulse move and pull down. And that's what I want to show you on this video of how to use these two indicators. Okay? Now I'm going to put it back to the 48 for myself. So I'm going to go to 48 on this one. Okay? Yeah, see 48 is working there. I have to check my logic on that. And then I'll change my data series here to 48 as well for now. There we go. Okay, so I'm using a smaller thing, but even though we're doing the 112. So what I want to get you on this video is if you're, the reason why I changed the numbers, like I said, to the 14, and let's I'm going to do one more thing here. I'm going to go to 15, see if I can get as many numbers as possible, nice groupings as possible on the tick range. Okay, let's go 15 here for now. Now it's 15. 15 is a nice type grouping here, type grouping here, type grouping, close enough within this zone of interest. Pulling back, and we watch our groupings, guys. See how it's creeping up like this? Then we know we have to wait because it's gobbling, so it's not working properly. Here, there's a lot of fighting as well. Here, a lot of fighting as well, a lot of fighting as well. And this is a lot of fighting within that large range. So now, because we're at a 15, you can see how she's pulling and pulling down. We're going to see 96, 96, 91, see all these grouping peaks. Now what we can do, let's take where is it? Yeah, a rectangle. We're in 709, we're already in there. Where all these 96, 94s, let's say from 700 to 93, let's say. That's you can see that's kind of support and resistance, and it needs to break down maybe back to all these dots here. Okay? Now, I do have other templates, but what we can do, let's try one template here. Okay? Well, let's see if this works. We're going to play around here. I'm going to add a market open. I'm going to add another market open. I'm going to add another market open. Okay? So this market open here, let's just turn all these off. First one is New York session. Second one, and these are all Eastern Standard Time, guys, is English session, and this will be Asian session. Okay? I'm going to turn those off as well. Just trying to minimize as many other lines as possible. Okay? Now hopefully we can see support and resistance. Now, as you can see, this was Asian session today. We broke through, and see now where she's bouncing. She's bouncing between the old New York session, and this was an old London session, and she dropped down. She popped up, she broke through, tapped, session. Mid-band, tapped, fought, broke through. As you can see where we're bouncing on the London session, below, breaking down, away we go. Tapping again. Going down. Now we know we have two, kind of like a deep retracement here. We know there's going to be some type of support and resistance. If I add more days, how many days will I have it? What if I put 6 days in there? Might take too much data up, but we'll find out here. Let's see if we have 6 days on here. Let's go focus. No, there's still nothing there. I probably need 15 or something. But as you can see, we are tapping between here and here. If it breaks, if you kind of start seeing it fail, we'll probably get back within this ugly zone again. And if we break out of this zone, we know we have support and resistance in these areas. Alrighty, well, I'm going to wrap up this video, and hopefully this can be informative for you guys to understand. And so the key is, our goal, of course, is to be consistent traders, but also our goal is just to find these areas of interest so we don't get knocked out of trades. Like, it doesn't look like this is much from here to here or here to here, but if we're on the right side of the trade between point A to point B, that's a $100 move in this little box, okay, close to $100. And because it looks like it's scaling up right now, maybe we can enter in here, or if it breaks after this zone, maybe she'll punch up to this old London session again. But we have to take a bigger analysis than just looking at this snapshot in time. You have to take a look at the big picture. But for pinpointing areas of interest, let's see if I can go farther back to see if there are any. Let's go right here. Let's go way back here. See, vibrating, break down. Comes back up, touches this line. Vibrating, break up, touches this line. Break up, touch this line, break down, mid-band. Break up, vibrate, breaks through. Once you break through, point A, point B. Here, point A, there must have been one way down here from more days back. So, and you can see over and over again, vibration levels. Tight area, vibration levels, big move. Once you break, big move. For vibration levels in this zones, because there's 2 market opens. And then next day, vibration over, away we go. Mid-band pop up, break down, trying to get back to zone A, zone B, zone A, zone B, break down, break down, break down. Once you know it's breaking down, you know they're punching through these levels. Alrighty. Other than that, you guys just make sure you pinpoint your trades, trade safe, and you guys have a great day. Take care. Bye.